In this video, I'm going to show you a real trade I'm doing today, some call options. This is Tesla call options for January 2024. The potential here is the investment that I'm going to be making is around $12,000, and the potential return is anything between $200,000 to up to $300,000, and that's in less than 2 years. Just a quick disclaimer, none of this is financial advice, everything is at your own risk. Options are extremely risky and in most cases will result in 100% capital loss. Okay, so why am I doing this? The risk is around $12,000, roughly 2% of the portfolio. I think it's likely that Tesla will be between 3,000 to 5,000 per share by January 2024. Obviously, I can lose 100% of this 12,000 I'm investing. What will the profits be used for? So I have some other options, 300, 1,000 strike price options for January 2024. In order to execute them, I obviously need capital to execute them, and I can obviously use margin to do that. But ideally, the goal is to have 1,000 shares of Tesla and have no margin. So thus, the profits from this would be used to exercise those options. Let's talk about the profits, and I'll give you a demo of the options profit calculator website you can use to calculate options, short-term, long-term, anything. Roughly speaking, the summary is that if the stock hits 3,500 per share by January 2024, then the profit on those options is going to be around $192,000. So, including the capital I've invested, I have roughly $200,000 from 12,000 invested. That's a 15x in less than 2 years. Now, this is obviously speculation, not investing. That's why it's only 2% of the portfolio. It's also worth noting that when Tesla tanked last week, and probably will do in the future, these options are going to be exponentially cheaper, not linear, exponentially cheaper. So the returns, potential returns, go up exponentially as well. I haven't looked at what price they went down to, but they're extremely volatile. So I expect these returns could almost be increased by another 50%. So instead of say a 15x return, it's probably more like a 20 to 25x return. So it's probably better to wait for Tesla to tank and to find a moment where there's negative sentiment in the market and then make this trade. But again, I don't time the market, so this is me taking more of a long-term view and just looking at the profits. Let's not do that first. Let's do a quick demo. So I've got the optionsprofitcalculator.com website open right now. I'll try to explain this in full detail, so if you're just listening, you should be able to just listen along. You don't have to watch the video. So first thing we do is we drop in the symbol of the stock we want to look at some options for. So in this case, Tesla. We also then have to pick the type of option. This is just a classic call option. You can pick it from the top here on the website, long call. And then we're going to pick the options. So at the top you'll see the dates. These are the dates of expiry of the options. This is a leap. This is a long-term option, so this is January 2024. This is the strike price that I'm kind of aka betting on. Now I've picked 2,475. I obviously think the stock is going to be a lot higher than that. I pick the ask, basically means it's the highest price you'll pay for the option right now. I'm picking 2 contracts. They come in chunks of 100, so thus it's 200 of those at $63 each, so thus $12,640. I then put in a price range. I don't allow that to calculate it for me because it will obviously be extremely conservative. I've put between $2,500 and $4,000. I obviously think the potential upside is even higher than this, but I've just tempered that a little bit. Click calculate, scroll down, and then it gives you a matrix of all the scenarios, dates, strike prices, and then potential profits. So the way that options work is the sooner the sooner the bet succeeds, if you will, or the sooner the price goes up, then exponentially the profits increase. But I'm not going to guess that these prices are going to happen before January 2024. So we'll look on the right hand side of this matrix, which will give the potential scenarios. So I've just picked in the middle, so 3,500 per share for January when these expire. That would result in 192,000 profit on obviously the options I bought for 12,000. So that's kind of how you calculate the profits. Now it's quite interesting because if you scroll down, obviously you can put a different price range, but you can see all the different eventualities. So for example, if let's say the stock hits 4,000 per share by then, which I think is very possible, then my profits go from 192,000 to 292,000, which is a crazy return. Also, if these eventualities happen sooner, so let's say by September next year, September 2023, the stock is around, say, 3,500 per share, then the profits jump from 192,000 to 214,000. So you can use this website, optionsprofitcalculator.com, click on long call bullish, punch in your details, and then check out the eventualities. Now obviously you can use this for short-term call options, things that happen this year or later this year, and you can see there is obviously the returns are much higher in those scenarios, but I would consider that much higher risk. Naturally, as the risk goes up, the price goes down, so that's why these options are relatively cheap, $63 each. So total invested capital is going to be 12,000. If you buy options that are with a lower strike price, for example, like the 1,000 strike price ones I have, obviously the option premium goes up roughly $200 or $300. So it all kind of makes sense why they're priced as they are. Anyway, so that's optionsprofitcalculator.com. Let's go back to the slide deck. Okay, yeah, so closing thoughts. This is a powerful strategy. You know, you could use less capital. So for example, if you invested half the amount, $6,000, you could turn that into $100,000 in less than 2 years. But obviously, conversely, if you invest, say, $100,000 on a 15x return, then that's 1.5 million in less than 2 years. This is something I could do, but I'm obviously taking a much more careful approach, only 2% of the portfolio. It's a very high risk strategy, you can lose all the money, so that's why I'm doing it with a small amount of the portfolio. The platform I'm using to do this is Interactive Brokers. You can use my link below if you want, or just type into Google Interactive Brokers and sign up. They are the best platform for this, they are the cheapest. So yeah, that's what I'm going to be using, and the key thing for me here is that to manage risk. But ultimately what this will do, if I'm successful, is it will allow me to exercise on my other options. I'll obviously be paying off margin between now and the rest of the year, but will give me, ultimately, in the end, I'll have 1,000 shares and no margin. So that's kind of my long-term plan. That's why I'm doing this. But again, this is speculating, not investing, and is a high-risk strategy. So be careful out there. Do everything at your own your own risk. And I hope this was useful. Any questions you have on this strategy, because this took me a long time to learn options and understand them, pop them below and I'll answer, and that can obviously help other people who may have the same questions. It takes a while to understand options, but they're actually relatively simple once you get it. I have another video on options on my channel. I suggest go watch that. It'll give you a breakdown of options, but I thought it was important to actually not only be transparent, but show a real example of a trade and how that could work. So yeah, thanks for listening. Please subscribe if you're not already. It helps me get out to more people, and I'll see you on the next video.